Welcome to the WorldWire Update. Don't forget to subscribe and click the bell icon for more updates and thrilling short scenes. The North American auto industry is facing a crisis few anticipated. Once a symbol of stability and innovation, the sector now finds itself at a crossroads, with uncertainty looming over its future. Giants like Ford and Tesla are shifting focus to Canada, reacting to a seismic policy change from Washington. This move marks a dramatic shift in strategy for companies that have long called the U.S. home. President Trump's steep new tariffs were meant to bring car production back to the U.S., but instead, they're driving companies north. The unintended consequences are rippling across the continent. The dream of revitalized American manufacturing is colliding with the reality of a deeply interconnected supply chain. Every car built in North America relies on parts and expertise that cross borders multiple times. The announcement of a 25% tariff on imported vehicles and parts has sent shockwaves through the industry. Costs are rising, and uncertainty is making it harder for companies to plan for the future. Automakers are scrambling, not to build new U.S. factories, but to shield themselves from financial fallout. Boardrooms are filled with urgent meetings, and managers are forced to make tough decisions. For Ford and Tesla, expanding in Canada is now a defensive move. It's a way to keep production running and protect their bottom line in the face of mounting challenges. This policy, designed to protect American jobs, may end up pushing them away. Plants that once bustled with activity now stand idle, and workers face an uncertain future. The foundation of North American auto manufacturing, seamless cross-border trade, is under threat. Disruptions at the border could slow production and increase costs for everyone. The future of hundreds of thousands of jobs and the structure of the industry itself hangs in the balance. The choices made now will shape the industry for years to come. In March 2025, President Trump announced a sweeping 25% tariff on all imported vehicles and auto parts. The move sent shockwaves through the global auto industry, instantly raising questions about the future of car manufacturing and trade. Overnight, automakers, suppliers, and workers across the world were forced to rethink their strategies and brace for a new era of uncertainty. The goal: make it too expensive to import, forcing companies to bring factories and jobs back to the U.S. Supporters argue this bold step could revive American manufacturing, spark new investments, and create thousands of well-paying jobs for American workers. The administration hopes to see shuttered plants reopen and new assembly lines humming with activity. But the tariffs hit nearly every major trading partner: Canada, Mexico, the EU, and Asia. These regions are deeply intertwined with the U.S. auto market, supplying everything from finished vehicles to critical components. The ripple effects are felt far beyond American borders. Tariffs on steel and aluminum have also driven up domestic prices, compounding the pain for automakers. Higher material costs mean higher production costs, squeezing profit margins and putting pressure on car prices for consumers. Even a reduced 12.5% tariff for Canadian imports with over 50% U.S. parts is a major new cost. For many automakers, these added expenses threaten to disrupt carefully balanced supply chains and long-standing cross-border partnerships. The administration promises a manufacturing renaissance, but the reality is more complicated. While some factories may benefit, others could struggle to adapt, and the overall impact on jobs remains uncertain. Modern cars are built from a global puzzle of parts: engines from Mexico, transmissions from Canada, electronics from Asia. Each vehicle is the result of a complex international collaboration that's taken decades to develop. The 25% tariff on parts means even made in the USA cars will see costs skyrocket. American consumers could soon face higher sticker prices, and automakers may be forced to pass on the extra costs. The policy doesn't distinguish between foreign competitors and essential components for U.S. factories. Every imported part, no matter how vital, is now subject to the same steep penalty. It's a risky bet that assumes the industry can be easily disentangled. But the reality is, decades of globalization have made the auto sector more interconnected than ever before. Automakers warn that the tariffs could make it too expensive to build cars anywhere in North America. Some fear plant closures, layoffs, and a shrinking industry if costs spiral out of control. The gamble is on, and the stakes are enormous. The future of American auto jobs and the industry itself now hangs in the balance as the world watches to see who will win and who will lose. The auto industry's response was swift and unified alarm. Ford's CEO warned the tariffs would cause chaos and massive costs. Automakers see the tariffs as a poison pill, not an incentive. Canadian union leaders warn assembly plants could shut down within weeks if tariffs are enforced. The just-in-time supply chain can't absorb a 25% cost hike. Parts won't arrive, and lines will stop. Stock prices for Ford, GM, and Stellantis plunged, while Tesla and Rivian rose, reflecting investor anxiety. The North American supply chain, built over decades, can't be rewired overnight. A tariff is like a dam in a river. The flow backs up, causing unpredictable damage. The industry fears a breakdown that could halt production and cost thousands of jobs. Despite political promises, automakers aren't rushing to move production back to the US. Relocating factories is a multi-billion-dollar, years-long process. No CEO will gamble on uncertain policy. Even US-assembled cars rely on imported parts, all now subject to tariffs. Analysts estimate the new taxes could raise car prices by $3,500 to $12,000. Political rhetoric often clashes with reality. Claims of new plants are frequently exaggerated or unrelated to tariffs. Automakers are trapped. They can't absorb the cost increase, but can't rebuild supply chains overnight. Building a new ecosystem of suppliers takes decades. The result isn't a manufacturing boom, but paralysis, higher costs, more instability. The industry is stuck between an expensive old system and no viable short-term alternative. For now, the only certainty is uncertainty. Amid the turmoil, the electric vehicle sector is uniting around a single charging standard. Major automakers, Ford, GM, Toyota, Honda, and more, are adopting Tesla's North American Charging Standard, NACS. This move makes Tesla's supercharger network the new industry standard, easing charging anxiety for EV owners. Ford and GM led the way, with others quickly joining. The unified standard means drivers of all brands can access reliable charging across North America. Automakers are also building thousands of new high-speed chargers through joint ventures. While the gasoline sector faces chaos, the EV industry is collaborating and moving forward. It's a rare bright spot, showing the industry can solve big problems together. The tariffs have sparked a political firestorm across North America, igniting fierce debate among leaders, workers, and industry experts alike. Canada's Prime Minister condemned the move, promising swift retaliation and pledging unwavering support for Canadian workers and their families, who now face growing uncertainty. The Canadian government views the tariffs as a direct violation of long-standing trade agreements and a serious threat to decades of economic partnership and trust between the two nations. Meanwhile, in the US, the United Auto Workers have thrown their support behind the tariffs, hoping these measures will bring manufacturing jobs back home and revitalize struggling communities. This stance puts American unions at odds with their Canadian counterparts, deepening cross-border rifts and fueling tensions between workers who once stood united. The conflict is now global. Both the European Union and Japan are considering their own responses, raising fears of a wider trade war that could disrupt markets worldwide. Automakers find themselves caught in the middle, with investment plans and future projects suddenly thrown into limbo, and uncertainty clouding every decision. Many new U.S. plant projects rely on policies the current administration may soon repeal, leaving investors and workers anxious about what comes next. The industry is deeply divided. Some push for protectionism, while others argue for continued global integration and open markets. Consumers and workers alike are caught in the crossfire, facing higher prices, job insecurity, and an uncertain future. The future of the auto industry now depends as much on political decisions and international negotiations as it does on innovation and engineering. The events of 2025 are redrawing the North American auto map. Tariffs have shattered the old model of seamless cross-border production. The industry may fragment into less efficient, more expensive national supply chains. American consumers could face higher prices while U.S. competitiveness declines. Canada could lose thousands of jobs or become a new export hub for Europe and Asia. companies like Ford and Tesla are hedging bets by expanding in Canada. The only clear path forward is in electric vehicles, where a unified charging standard offers hope. But even this progress is threatened by trade instability. The industry's future will be shaped by the clash between protectionism and collaboration. The road ahead is uncertain, filled with both risk and opportunity.